Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Matt Battiali, writes the New Energy Investor, which is published under the Mangrove Investor, which I will put a link to below this interview. And Matt, as we keep bringing you on the show, we will continue to discuss this whole critical minerals sector, and we're going to focus on graphite because just recently there was news that Rio took a big position in a graphite miner that is Sovereign Metals. And graphite is part of these critical minerals, especially when it comes to batteries, because of its use in a lot of these newer batteries that continue to be developed and continue to grow in terms of general use case. Matt, graphite, we don't usually talk about it. It's not first and foremost on a lot of investors' minds. What do you think the investment angle is here for graphite?
Well, graphite is one of those minerals that I just don't follow that closely for a lot of reasons. It's one of those minerals where it's hard to price, so you really don't know the market size. It's used in a lot of other industrial processes, so the battery angle takes up, I think, 5% of the market. So I haven't really been following it that closely. And then all of a sudden, we saw Rio take that position. Graphite One, which is a exploration company, just got $37.5 million from the U.S. government under the U.S. Defense Production Act. And so all of a sudden, the fact that graphite makes up half a typical EV battery, it's suddenly really important. It's a really interesting problem. And there's a lot of public companies and they're just like bottom feeding right now.
Well, Matt, to that point, I can remember, and we were talking a little bit about this off mic, that in the prior battery boom, kind of in the 2010 through 2012 range, there was a lot more graphite companies than there are now, kind of like what we're seeing modern day in lithium, where everybody is piling into the lithium space. And while lithium is actually very important for these batteries, I think people forget, to your point, that half of these things are graphite. And it's hard to invest in graphite companies for investors, from that angle, just because there's all these things about the different flake size of graphite and which ones are good for batteries and which ones are good for, other purposes, and what makes a good graphite deposit. How do you see the investment angle of this working into, the discussion? Should people be looking for near-term producers? Should they be looking for large deposits? Should they be looking for key strategic stakeholders? What do you have your eye on?
Yeah, I think key strategic stakeholders is where I would start, because I want people who are smarter than me to validate these resources. And it's not like when someone takes a position in one of these companies that the stock blows up. There really isn't. Graphite One, for example, is 150 million market cap right now. So having the Defense Department take a position in them, hasn't sent the stock into orbit, but it does give us a bit of validation to say, okay, this is where I want to start my research on these guys. And then, the next part is, if they have near-term production, I want to look in and see I want to see what the offtake agreements look like, what the pricing looks like, so we can build a discounted cash flow model and figure out if this is going to be a science project or if it's actually going to be a working business.
One of the maybe issues with graphite too is that there isn't something as, I guess, clear cut as, say, the spot market or the futures market as there is in gold. So there adds that little bit of complexity, but also, to Shad's point, there's all kinds of different, I guess, forms of graphite, different flake sizes. How do you go about figuring out which deposits, which assets are profitable?
Yeah. Check back with us next week. I'm telling you, graphite is opaque. It's very difficult for me to kind of get a good read on the market because there are so many different kind of qualities and we don't have a good spot market. I mean, at least with coal, you have a comparable thing where coal, depending on the mine, you had the different energy values of the coal and different contaminant values. So you knew if you got a chunk of coal from a certain mine, that it was going to leave you with so much percent of residual ash and was going to produce so many BTUs of energy. And, you could price that. And so we knew what we were getting, or we could get a general estimate of if this mine produces, 100 tons of this coal a day and they get $3 a ton, then we know how much they're going to produce. With graphite, it's more difficult, and I find that we have to rely on company documents, and I don't like that. That's why I say I want to see who's investing in these companies, and I want to see their validation. So I want to see people who really understand that market and have a better sense of what the graphite market looks like in terms of current and future prices. So that's where following really smart investors is going to matter to me.
Well, this also brings up kind of a wider discussion point about investing in the niche metals. So when you think about something like manganese, it's also important for batteries, and it's getting a little bit more traction with investors too. A couple companies popping with manganese, but we've seen this with other, the rare earth elements or some of the other strategic metals that are necessary. Many of them, there are these critical minerals, but if it's niobium or tungsten or even molybdenum, there's all these other metals people can invest in. But if somebody has a basket of 10 stocks, Matt, should they pick a graphite company and plop it in there? I don't know if there's even a good ETF that consolidates it, but how do you personally going about investing in some of these niche metals where there's not as big of an audience for them?
Yeah, my approach to that really is a basket. So there's a couple of battery metals ETFs that kind of do a better job of owning a group rather than an individual. That would be for most general investors, to be honest, for new investors, I would say learn about graphite, but invest in copper. If you're going to play that would be my first way to play batteries. But the second way would be to find there are some pretty good battery metal ETFs that do that incorporate a little bit of rare earth elements, a little bit of graphite, lithium, copper, because you're adding layer upon layer of risk. The more opaque the market is, the more risk you have. And so you take, for example, a mining company. If it's mining gold, we can understand the model, but we still have to understand what the ore looks like and what the metallurgy is and what the recovery rate is, that sort of thing. But with graphite, they're so closed systems, we really don't have a good view into the economics, which just adds more and more risk. So the way to de-risk that is to, like I said, either follow someone like Rio Tinto into a company. In their case, that was an Australian company that's going to be difficult for most North Americans to buy. Or you follow like the Defense Department into Graphite One, which is a smaller company. You're taking on a lot of risk by doing that. It's exposure to graphite, and you have a little bit of leeway in there because that the Defense Department sees benefit here. But the best way, I think, to kind of offset individual company risk and the commodity risk is to buy a basket through an ETF.
Doesn't that mean then too that you're also sticking with somewhat of the bigger guys, mostly because these ETFs don't include a lot of the small or newer exploration companies?
Yeah, and that's okay too, right? Because you're reducing your risk, you're reducing your upside, but at the same time you're reducing your risk. And in this case, I think the play really is the electrification uptrend, right? We know, we can all do the math. We know that, take graphite, for example. The graphite market is already being consumed in industry. And now we have this boom in boom in batteries that's going to start eating into that supply of graphite. So the graphite price is going to go up. So there's going to be this uptrend, this tailwind for certain kinds of graphite. It's the same story with copper. It's the same story with manganese. It's the same story to some extent with lithium. And so That's the bull market that we want to be exposed to. So if you buy these large companies, they're still going to benefit. So you're still going to make money on this, and you're going to reduce your risk. I think you can make a lot of money in graphite because these things look left for dead. Like Shad said, there are a lot fewer of these companies around today than there were, back in 10 years ago, right? When the first kind of battery boom was happening.
Well, there's one other wild card in the graphite space that I guess we should at least mention, and that's graphene. So graphene is a scientific experiment where they're changing the molecular structure of graphite around to use it in everything from fishing poles to batteries to, high temperature torque, metallic projects. And so there's also about a dozen graphene companies trying to take graphite and make it something different. Do you have any thoughts on the graphene market that kind of ties in with graphite?
Stay tuned for next week. No, but that does bring up the other part of this, the graphite story that we're talking about mining companies. But graphite can be commercially produced, and it is commercially produced. And so it's another one of those concerns that I have with this market where when and if graphite prices reach a tipping point, can industry just start making it cheaper than we can mine it? At which point all these mining companies go away. So that's another overarching risk I see in the kind of the graphite space.
That's that whole substitution risk, though, too, isn't it? Because as much as supply is expected to stay, I guess, somewhat steady, at least in the near term, demand, everyone's saying, will continue to rise because so much graphite is used in these batteries. But if the price gets too high, couldn't we find substitutions or, to your point, other ways of making it?
Absolutely. Absolutely. I mean, there's always this fear has been around in the nickel space forever where, nickel prices would get so high that we'd start being able to refine nickel out of what's called laterites. So we already make aluminum out of these laterites. They're just basically rust. And we haven't really found a good way to make nickel out of the nickel laterites for an economic price. But you worry about that. Like you get to a point where the price is high enough that you can bring on all this new supply. That's, it's the same thing in the oil space. There's a lot of oil around. If the oil price hits $150 a barrel, all of a sudden you can produce a lot of oil economically. So we always have that same risk in these supply demand situations. And that's why I really, any prediction, any forecast that I see that has a commodity price going to the moon, I take with a grain of salt because that's just not how these things work, because you can substitute.
Yeah, I completely agree with you. Whenever we hear this, look at these supply demand imbalances, and that's going to cause this astronomical run in prices. We hear a lot about that, and we don't necessarily see a lot of the follow through, especially in a long-term sense. So I don't know, just always interesting to see. And look, it's something that we haven't talked about for a while. Graphite, I know that there are a few companies out there. I've followed one in particular for quite a while, but it just doesn't have kind of the, I guess, investor interest that some of these other metals do. But more money coming into the sector, more government support, that can turn sentiment pretty quickly. Matt, always interesting chatting with you. Thanks for bringing up this graphite topic to us. We're going to chat in another couple weeks, and we're going to stick to the critical minerals because out of any, I guess, commodity or resource sector, boy, oh boy, there's constant news coming out of these critical minerals. Matt, thank you, as always, for your time, buddy. We'll chat again in a couple weeks.